It is May 17. Michael Vaughn with Brian Acker. And, well, let's begin with a performance review year to date, middle of May, Brian.
Sure. So when you're looking at our U.S. Value 50 fund, well, we're just under a loss of 9.8 or something like that percent for the year to date. That compares to our benchmark around 5%, so we're underperforming there.
And currency is a big piece of that.
It is, but at the end of the day, it's, and we can get into it, what these markets are, but a lot of that outperformance, if you didn't have Amazon and Facebook, that's what your performance is going to be, where we aren't. I mean, the U.S. market is now so narrow.
Yeah.
It's defined by kind of 4 stocks. So if you didn't have those 4 stocks, or if you're a value manager like us, I mean, you're underperforming this year. So in Canada, we're flat, and the TSX is up about a little over 7%. So again, we're lagging there, and again, the story is there. I mean, broadly, a lot of the sectors in the index we're not in. There's no value, and it's very, very hard in this market. If you have any sort of strategy, whether it's value or even growth here, I mean, you're not performing at all relative to the index. It's a very frustrating time, but it's a time that if you do try to either catch up or put some or
well, that's what I want to ask. I mean, when in a low return market, a frustrating market like this, people must get you on the phone and say, well, Brian, do something.
Yeah, and when you do, you're going to get your head handed to you. That's the problem here.
Give me an example. Tell me what we're avoiding.
That's a good question. What we're trying to do is look for companies that offer value, that offer a dividend, that we feel safe in. You know, if the market were to correct 10%, we'd love to buy more of these companies. Where these markets are going, especially in the U.S., are, let's say, Amazon. Yeah. I mean, they've been hitting the cover off the ball. That's great, but they're at a valuation level that really it's priced for perfection. Is that a value mandate? Nope, it isn't. So
Bezos is making $1 billion in an afternoon. I think that's.
I think on the last earnings report he made 6. But anyway, so. But that's what you're facing here. Yeah. But this market wants to pull you out of what you're doing and go and chase other things. And what I call is desultant investing. So in other words, companies that don't have any fundamentals, companies that have all momentum, they're the companies that are actually running here. The last time we saw this was actually in the spring of 2000. So when the market, before the market had the big correction in 2000, 2001, this is the type of stocks that were actually running. The stocks that we would say in the bottom 10%, if you took all the fundamentals of all the stocks and ranked them according to what's cheap in terms of where it's trading relative to the model price to the most expensive, that most expensive category, that bottom 10%, they're the ones that are running in this market, not the top 10%. So we are in, and we're willing to go down to maybe the 50% level, or halfway down that stratum, if you will. But we're not willing to go down to 10. And if you're going to play in that 10%, and if the markets turn, that's where you lose the most.
I bet.
So that's what kind of market you're in. Yes, we're underperforming, but we know why we're outperforming, and we're choosing not to play that game, because when it does reverse, as it did in April of 2000, the stocks that you're going to play in that decile 10 area can lose 20-30% within a blink of an eye.
I bet that's true.
So we know what's going on. Would we like to outperform? Yes, we would. But also knowing what is performing is causing us some relaxation, because we're not going to play that game. So.
Will politics affect sentiment this summer? I mean, the U.S. election's coming, and the British Brexit referendum is at the end of June.
Right. So I guess what I'm seeing here is usually about 2 months before, certainly a presidential election, the stock market will pause. It will wait. Some bets will be made. A great example was Bill Clinton when he was elected against George Herbert Walker Bush. The first Bush was, it looked like he was leading, so healthcare stocks, because he wanted to bring in healthcare, or Hillary Care as it's known. And so the health stocks started to correct. So again, depending on who's going to be in, the market is going to price in, if you will, and that happens a couple months. Here it is in May, and I would argue maybe the market's taking a back seat to the politics as we're speaking now, as opposed to, let's say, maybe September, October-ish, and having a longer period of time here of just waiting, because it's such a, if I say, such a wacky presidential year. That would probably be the understatement of this whole video segment. but the markets really don't know, probably, of how to price in either Donald Trump or Hillary Clinton, or even Hillary Clinton fighting Bernie Sanders. So there's a lot of unknown things, and maybe the market's pausing here earlier than usual in a presidential year. So that's another thing to consider.
Interesting stuff. Well, thanks for your time, Brian, and don't go chasing Amazon.
No, I won't. Thank you, Michael.